What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. Today, we're going to be taking a look at 2008, what happened with home prices back then during that crash, and why home prices haven't fallen off a cliff yet today. And I'll kind of leave it open to you folks to speculate if they are going to fall off a cliff. But I'm also going to make my point about why I personally don't think home prices are going to fall off a cliff like they did in 2008. But let's get right into the video. Let's take a look at these maps, these charts, take a look at the data, try to decipher what's going on. So the first thing that we're going to look at here is this map. This is from the New York Fed. So all these links are in the description if you want to take a look at these for yourself. So this is what the United States home price changes. This is a map of the home price changes throughout the United States. So basically, the darker brown home an area is, the more home prices have declined. The darker blue, the more home prices have increased. And these are various counties across the United States. So kind of all over, you can see there's some rural parts of the United States that aren't covered, but for the most part, it does a relatively good job at visualizing what's going on. So you can see some of the differences across the housing market where these, some markets in New Mexico here down 7.5%. We have some counties in Texas down 12%. Um, some darker counties here in California as well. And then over on the East Coast, you see a lot of modest increases, like basically all throughout Vermont, parts of New Hampshire, all of Massachusetts, modest increases. And then in New York, some modest decreases. So overall, I mean, what I'm seeing visually and what you see by this number, overall, the United States has increased their home price, according to the New York Fed, by 2.5% year over year for the month of July 2023. So obviously not, we haven't seen home prices decrease year over year, or at least we're not seeing home prices decrease year over year, according to this chart as of July. So let's compare things back to 2008, what was going on then, how quickly home prices fell, and see if we can learn something from that. So I'm moving all the way back to January of 2006. Now, this chart's really cool. You can play with it yourselves. Again, the link is in the description. But this is home prices in January of 2006. So home prices were increasing at almost 15% year over year at the start of 2006. You see, you have some gray up here in Michigan, but overall, look at all this dark blue down in New Mexico, down in Florida, in California. People were buying homes like crazy. Home prices were skyrocketing as of January 2006. Now let's poke through this chart. So February, still a lot of blue, but increasing at a less rate, down to 14%, 12.5% in March. And I'm just going to go kind of quickly, take a look at how the map changes. You see more gray getting in there. 5.5% across the US, 4.5% in August. We see a lot more brown coming into this graph. November, December, we're at 0.4%. And then boom, January 2007, we're at negative 0.5%. So basically, all the months from January 2006 to January 2007 saw a decrease in how quickly home prices were increasing year over year until January 2007. We saw home prices start to decrease year over year. And now let's continue and take a look at what happened. So February down 1.4%. You see a lot more gray coming in. Down 2.7, 3.6 in April. We just see more gray, less blue throughout the country as we move into 2008. October down 7.5%. Look at California just getting hammered. November, December, and then back to January. We're at minus 10.9% in January. And look at all the gray around here. Now, you still have pockets of the United States that are positive, have modest positive growth, like up here in Washington, over in New York, some of Vermont, and then parts of Texas here. But for the most part, a lot of the country is overall, it's brown, it's gray. Home prices are declining. This is right at the start of the great financial crisis. And then we're going to kind of motor through the graph here just so you can see what happened. And obviously, everybody knows about the great financial crisis, at least most people do, where home prices completely collapse. All right, just give it a second for it to load here. December of 2008, all this gray, almost no blue left on the map as the country is experiencing minus 17% home prices year over year. So the whole country is starting to collapse. Almost all of these housing markets are down. Yes, there are some modest pockets of blue, like there will be, but for the most part, the entire country is decreasing. Now let's take a look at what happened. About what's going on now. So let's go to. We're going to start at January of 2022. So pretty similar. January 2006, it was up 15%. January of 2022, it's up 17.6%. Now let's take a look at this chart. Up 18.4%, 19.3% in March. Lots of blue. Basically no price declines across the entire U.S. here in 2022 at the beginning. And now we start to see that rate of increase go down. So home prices are not moving up year over year. Or they are moving up, but they're moving up at a slower pace, excuse me. So still a lot of blue in November of 2022. February 2023, up 4.7%. So let's go back to January real quick. So January went from 17% to now up 5% at the beginning of this year, at the beginning of 2023. Still a lot of blue, but we're seeing more pockets of that tan, of those negative home values year over year. Now let's move forward. Continuing to decrease. April of 2023, we're down to 2.2%. May, we're down at 1.6%. So home prices are still up overall nationally. You can see all this blue, but they're not up very much. They're basically flat. Now, June of 2023, we see completely flat growth in the rate of change. So still at 1.6%. You can, if you notice, it was decreasing for a significant period of time, for many months, until we hit June. And now the rate of change, the rate that home prices were increasing, has stopped. And now we go to July. And year over year, home prices, have increased 2.5%. So up a little bit from June, but essentially basically flat. So what do I see when I look at this chart? When I look at these charts and I see this data, I see back in 2008, home prices started to decline, and once that rate of increase in home prices started to decline in 2006, they didn't stop. So home prices were increasing at 15% year over year, and then they went down 14, 13, 12, 10, 5, 4, and then so you kind of saw the writing on the wall, and then by January of 2007, they were negative. They were at minus 0.5% year over year on a national basis, and then from there it just got worse. Home prices kept declining year over year each month that we went on. So the crash, kept getting worse. Now, at least what's happened with the most recent data that we have is the rate of change for home prices was increasing significantly in 2022 and 2021, of course. But really in 2022, home prices were going up, and then the Fed started to hike rates. We see the rate of which home prices are going up nationally across the country start to decrease until we get to May and June of 2023. And then it doesn't continue to fall off like we saw in 2008. We don't see that steep rate of decline. We don't see home prices decline year over year like we saw in 2007 and then continue to drop throughout the year. We see it hit a floor, at least some sort of a floor, at 1.6% increase year over year. And then we see it tick up slightly in July to 2.5%, but essentially flat. So why is this happening? Why is it not continuing to crash like we saw in 2008? I mean, a big part of that has to do with the inventory, right? If we take a look at what happened in 2008, right, we had massive building up to 2008. I've gone over this many times on the channel, but home builders were building a ton of homes leading up to 2008. In the most recent period, the most recent housing market, home builders were still recovering from that crash. And we haven't built anywhere near that level for many years. So there's a lot less new construction coming to the market. At the same time, if we take a look at the home buyer payments, now this is out of Redfin. So the median home buyer right now is getting crushed. It's really tough for people to buy a home. But people still have a lot of people who purchased in 2021 and 2020, or even before then, their mortgage payment is really obtainable. It is really affordable. It's at that $1,500 a month to $1,700 a month. So it's not something that they're stressing with. These home owners, home sellers, don't have a lot of incentive to sell, give up their good mortgage rate, give up that affordable payment, and trade into something that is less affordable at that $2,700 a month range. I mean, that's a pretty expensive total monthly payment. At the same time, they have plenty of equity in their home. So, they can handle if they did need to sell, if they fell on hard times, they could potentially sell for more than they had, for more than they bought it for, and recoup some of those losses, or not some of those losses, but recoup some of that equity, realize their equity, and move that into another venture that might be more profitable for them. But people aren't being pressured. They're not seeing, oh man, I'm negative on my home, I'm underwater on my home. For the most part, most people are above water on their home, besides this 1% of the country that has negative equity overall. So, really, what I think is going on is it's just people don't have much incentive to sell. The people that are in their homes right now, unemployment is still low, even though inflation's high and people are picking up second jobs. We haven't seen mass unemployment yet, so people aren't losing their jobs like crazy, and they can still afford to make their mortgage payments. The majority of these mortgage payments are very affordable. If we look at those again, we'll go back to Redfin. We'll take a look at the 2021 and 2020 levels. Very affordable $1,500 a month mortgage payment for the median priced home in this country. Now, at the same time, these homes that are less affordable, right, in 2022 and 2023, when this cost of financing has gone up, transactions have gone down. Let's just take a look at closed sales here. Let's see. I guess they don't have a chart of closed sales. Pending sales within 2 weeks. Well, Redfin, all right, here we go. Pending sales. So they don't have closed sales, but they have a chart of pending sales. You can see it's below 2022 levels. So during this period of unaffordability, when home buyer payments are high, when people getting into homes might be stressed out by their mortgage payment, not many people are purchasing these homes. Less people were than years past. Most of the homeowners, most of the people who bought homes did so before rates were this high, before things were so unaffordable. And so they can comfortably afford to pay their mortgage payment and are not stressed out. Now, these recent buyers, I'm sure, are feeling the stress. But again, transactions are down year over year. So, in my opinion, I think there's less homeowners right now who are stressed out than there were in 2008, leading up to that crash. And I think a big part of that has to do with interest rates. It has to do with the inventory on the market. And we're seeing that in the rate of increase and the rate of decline in home sales. Basically, home prices are flat year over year. They've gone up slightly, but they're not continuing to drop. That rate of increase isn't continuing to fall out like we saw in 2008, because there's less inventory on the market, because a lot of these homeowners are locked into a 3% rate, a 2% rate, a 5% rate, and don't have much incentive to sell and try to find something that is probably going to be less affordable, or pay rent that is also going to be, unaffordable for them. They've locked into a comfortable monthly payment. Now, it's going to be interesting to see what happens in the upcoming years, as some of these home buyers might have overextended themselves. But at least what we're seeing right now is we're not seeing a lot of forced sellers. We're seeing a lot of sellers with equity who don't have to sell because they have an affordable monthly payment. And because of that, that's keeping home prices stable. There's still enough buyers out there to purchase these homes. So anyway, I hope you guys got something out of this video. I really enjoyed making it. All my contact information is in the description. Feel free to reach out to me if you're looking to buy or sell a home anywhere across the country. I'd be happy to help. Other than that, leave me a comment. Let me know what you think. Do you agree with my interpretation of this data? Do you disagree? Take a look at the charts and the links yourself. And I'll see you guys in the next video.